This individual confirms what we've been thinking for a long time, what I've been saying for a long time. You know, I've been telling you that we're in advance of them. We're so advanced, they can't catch up. We can dominate. We can do it without them. They need us. We don't need them. Remember, I've been saying that. And we've heard a few of these big entities confirm this. Now you're going to hear another one. They do this. See, they release this information around Thanksgiving because they know you're going to be distracted. You're not going to hear this, because if you hear this and when you hear this, you understand how dominant distributed ledger technology is going to be, period. Listen to this. We're not going to waste any more time. This is from Cointelegraph. The article is titled "Digital Money Lag Threatens International Security." Scroll down just a little bit to the paragraph that begins with "what has." Here we go. What has spurred Bailey's comments resembles a concern shared by regulators worldwide that fintech firms today, intensely driven by innovation and often less regulated across global markets, are advancing digital solutions faster than central banks. Let's just stop there before we move on. Don't worry, they're going to get a little bit deeper. What does that mean? That means that we are becoming the dominant. They have to try to catch up with us. They can't compete with us. That's why they literally highlighted the word concern. Look at that. They highlighted it. It's a concern because we are a threat to their dominance. But what is their dominance predicated upon? Moving lots of value, having lots of assets under management. I'm going to go on both sides of the legacy system. Why not? They're all in the same boat. None of them can compete with us. When they start putting all those tokenized assets on chain, do people understand how much it can make those native cryptos explode? Of course, that gives power to the fintechs, and we're just here to make money. But everybody wins all around. Fintechs will make money as well. But the holders of those tokens, not financial advice, you do what you want to do. But that's major that they're concerned. But wait, let's continue on. Then he says, are advancing digital solutions faster than central banks. Didn't I tell you? I told you they can't catch us. This is one reason why they're like, you know what? We're just going to focus on wholesale CBDCs. That makes sense, doesn't it? Because in the retail aspect, we dominate when it comes to retail. We dominate also when it comes to wholesale. But wholesale is where they can benefit the fastest, easiest. They have the most control, the most power. They don't have to battle the people right now, which it looks like they're leaning towards leaving retail to us. If they leave retail to us, that price is going to go up very easily at some point if these companies do their jobs. Golden age, right? There's nothing else that could be but a golden age. We're not in a golden age now. This is just cute now. This is a fun time, sure. Golden age, bigger than whatever has been before because of things like this, domination like this that happens in the future. Wait, let's keep going. This says traditional financial institutions simply cannot match up. How much more clear does it get? Wait, let me scroll up for a bit. I'm going to give you who this individual is so you know it's serious. So this is coming from the Bank of England's governor, Andrew Bailey. That's the Bailey they're referencing here. This is serious business. This is a serious admission. They're admitting that they are weak right now. Do you know how that sounds to the commercial banks? Do you understand the message that's sending to the commercial banks? Thousands upon thousands of which we can scoop up, which will make those prices explode. And we're so close. What this sounds like to the commercial banks is, hey, why should we run through your systems? We can connect to your systems, but why don't we work with the fintechs? Who's that? Who's at the forefront of all of that? DLT technology, Ripple, Quant, Chainlink, Solana, Algorand, Stellar. Who else? There's only a few. It's not like there's a whole bunch. They're at the forefront of all of this. So who would be the biggest benefitor from working with the commercial banks? Who's in line first when we get absolute clarity, which looks like it's going to happen sometime in mid 2025? Possibly. This is what some of the lawyers say. Who's in line to benefit from that? Who's been shaking hands and taking meetings with all these banks for all these years? Who? Right. Let's read this little tidbit, a little bit more. This rapid acceleration of private sector solutions threatens the stability, security, and privacy of global financial markets if left unchecked. What do they mean by that? That's a very, very deceptive and murky statement. Let's decipher right here, right now, break this down once and for all. When they say threatens the stability, they're talking about their power structure, not us. We benefit from that. We control our data. If I use Brave browser or Batcoin or whatever, and I want you to have my data, I'll let you use my data. You pay me for my data. You don't pay a third party who stole my data through cookies on my computer and mechanisms on my computer, just searching my computer, and then they sell that information to everyone else. No, I can give that to you. DLT, Web3, whatever they want to call it, it puts all the power in the hands of the people. Lending, do people need lending? We can do lending now. We can lend. We got all this Bitcoin, all this crypto. We can lend now. Not just the banks. We're lending. We have smart contracts. We have all the power. We're making tons of money. We have leverage. We have power. That's what they mean when they say stability, because they want to be the only ones who control that. They want to lord over everyone, which means what? Circle back around. How is this relevant to price? It means we're dominant. It means that we can control the flow of value the way they used to, which means that those prices can explode. The flow of value across these chains will affect all of these native cryptos, XRP, Quant, QNT, Chainlink, Solana, XLM, Algorand. That's what we want. Let's go. Security, we're not worried about that. We have better security than they do. We've read all the articles this year how the bank's been getting hacked, robbed, financial institutions getting held for digital ransom because of the information. These people that take the information say, if you don't pay us this amount of money, we're going to put this information out on the dark web. They don't have any better security than we do. We're much better than them. And on top of that, we're quantum proof. Quantum proof. Did you see the articles coming out recently about quantum computing and the advances in quantum computing? We're ready for that. They're not. They're getting broken down by basic methods. When quantum computers, some of the most advanced on the planet, the most advanced on the planet as of right now that we know of, they can't even break us. So it's not security. Security, let's move on to this. It says, and privacy of global financial markets. Privacy? No, we have all the privacy. They know that. That's why they want to use us. That's why all their top people are saying the private sector is going to lead the way. Privacy, they're getting hacked left and right, not us. We put people's information in their own hands. We make them responsible for their own value and information. They know that also. That's why another reason they're stepping back from retail, because when it comes to information, they're not better than us, which means what? The people of the world, when we're unleashed and we can flood them with all this factual information that's beneficial for them, they will come to us with ease, as opposed to coming to the legacy system who wants to control them and who they take massive umbrage to. They don't like the legacy system. Regular people, they don't trust them anymore. But it's not about trusting us, because once again, we put the power into their hands. It's about them trusting themselves. That people, if you can sell people trusting themselves and them having power to them, that's how value is made. Long time trust and value. As the world of digital money continues to advance, central banks and financial institutions face an imperative to upgrade their technology and to adopt the innovation. White flag. They're throwing the white flag. They must congeal with the new financial system. This is just them throwing a tantrum. Oh, they know they have to do it, but they're saying, we have to do it. Doesn't mean we have to like it. Right. They're going to like that value for sure. They're going to be quiet. Once that value starts to flow, they're going to be quiet. They must do this or they will be dominated. We will dominate outright. We will take over. Prices will explode. Not financial advice. It's just my humble opinion. I don't work for these companies. I don't know these people. Just my humble opinion as a researcher. We will dominate outright, and I feel like those prices will explode on a lot of these top cryptos. The golden age is not here yet, but it's coming. Those who are moving in position, those who are in the know, they understand that there can be astronomical explosions in price. Just my humble opinion. You have your own. Some people believe it's not. Some people believe there's just going to be a little bit made. I don't know what people believe. I can only tell you what I think. That's it. Let's move on here. All right. So I wanted to get that one out the way. I thought that was a very good, powerful article. Make sure to read that if you haven't already. So now let's jump on here. A little bit of Cardano news. This article is titled, "Can Cardano price jump by 500% to $6?" What time frame are we talking? This is cryptocurrencies held steady on Thursday after most of them staged a strong recovery a day earlier. Cardano price was trading at 99 cents as crypto analysts predicted that ADA was about to make a strong comeback. One analyst expects that the coin will jump to $6 in the coming weeks. In the coming weeks, $6? That much? That fast? I say give it to 2025, deep into 2025. I still believe we haven't seen the fullness of this bull run. I still believe that. Although I do admit things have happened much quicker than I anticipated. Bitcoin exploded much quicker than I anticipated. Everything else followed just like I thought, though. Everything rose together, didn't it? Yes, it did. Just like in 2021. But it's strange. Looking at all the positive catalysts that are there, not all of them have come to fruition just yet. They haven't, which would lead me to believe that if more of them, and these are big ones, are coming into fruition in the future, that's going to lead to a bigger explosion in Bitcoin and all the top utility coin cryptos. I think that's logical, right? And sure, somebody else could see something else. No two eyes see alike. Most crypto analysts were upbeat about Cardano's price after Bitwise filed for a spot ETF. Really? I don't remember hearing about that. The view is that the fund will be approved. It says here, one of the most optimistic analysts, Ali Martinez, predicted that the value of ADA would ultimately jump to $6 between July and September next year. Oh, yeah. So why did they said weeks at the top? Didn't they say that? They said weeks. Here they're saying July to September next year. Sure, if certain catalysts are in play, yes, I could see that happening. But those catalysts have to come to fruition, I believe. Some of this positive momentum, I think Charles Hoskinson needs to utilize that in deploying some of the newer advanced mechanisms and partnerships that they claim that they're working on, if they haven't done it already. And sure, yeah, I could see that happening. I would go closer to, even though it's $1 down, I know it's not much, I would say more $4 to $5. I would think more $4 to $5. But $6, yeah, I could see that being possible. I don't think that's unreasonable. Do you? You guys let me know. You think $6 ADA is unreasonable for next year? I'm not talking long term into the future. I think Cardano is much more valuable, or could be much more explosive than that long into the future. I'm just talking about next year, July to September. Do you think $6 is reasonable? Let me know. All right, so now let's move on here. Let's get some of this Bitcoin news out of the way, and then we'll close out with a little bit of silver, okay? So now, this article is titled $13.6 billion in Bitcoin options expire Friday. Can bulls push Bitcoin price to $100,000? You think this can happen, folks? Can this week's $13.6 billion Bitcoin options expire trigger a Bitcoin price rally to $100,000 and beyond? It says this event provides bulls with a pivotal opportunity to push Bitcoin's price above $100,000, making it crucial to assess the impact of call, buy, and put sell options to expire on November 29th. The S&P 500 has struggled to maintain levels above 6,000 over the past 3 weeks, signaling growing investor caution. This shift in sentiment is reflected in the United States 5-year Treasury yield, which has declined from 4.35% on November 15th to the current 4.12%. This is investors increasingly prioritize government bonds, relative safety, even at lower returns. Periods of macroeconomic uncertainty, often driven by fears of economic slowdown, typically trigger a flight to quality, prompting investors to exit riskier assets. Still, the 5% rebound from Bitcoin's $90,775 low on November 26 suggests that confidence remains strong amid 34% gains over the last 30 days. Let me take a sip of water, people. Bear with me. I do not want to edit this video out. Just bear with me. I'm just going to get a little sip off camera. Hold on. Good water. Oh, man. Let me tell you, You're thirsty? That water really, what did the youth say? It hits different. It does. That water bring you back to life. You're like, you drink that water, you're right awake. Still 5%. Somebody out there is like, Mick, who's that? Who else does water do that to? I don't know. I'm asking. I ask the questions. Still, the 5% rebound from Bitcoin's, okay, we read that part. In a research note dated November 27th, economists at Pantheon Macroeconomics said that the U.S. personal consumption expenditures, PCE inflation, could rise above 3%. Oh, given a lot of these like economic, a lot of this economic gymnastics that they think is going to happen in the future. We'll see. Quote, temporary and uncertain conditions of this nature create incentives to delay investments. We'll see. We'll see how it goes. All right. So now let's move on here, because I do have one more Bitcoin article, and then we'll see if we can slide in a little bit of the silver. We have some silver news today. Yeah. Can't forget about our good old commodities, especially now with all these geopolitical tensions out here. There is an ad here that refuses to leave. 500,000 Bitcoin sold by long-term holders as Bitcoin rallies toward $100,000. Now, here's the thing. Now, I'm going to wait for the articles to come out from, I believe, isn't it Sentiment and a lot of these other pro companies that track the activity of the large asset managers like BlackRock, etc. Because the trend has been, whenever there's a lot of selling going on from the so-called long-term holders, the big companies are buying that Bitcoin up. You know what that means? That means the future remains super bullish. All right, so I'm waiting to see if that occurs here. This is a lot of Bitcoin getting sold. Long-term holders have hawked more than 5,000 Bitcoin amid Bitcoin's latest bull run. The firm notes in a new analysis that long-term holder cohort reached its peak Bitcoin supply in September. Quote, like all previous cycles, the long-term holder cohort is taking advantage of inflowing liquidity and strengthened demand side to recommence distribution of held supply at scale. My apologies. The way they've written this, I don't know. It just seems a little choppy to me. It doesn't have like a natural human flow. I got to be honest. I have to wonder sometimes if AI is helping people write, because AI doesn't always have a natural human flow. You know what I mean? You ever experienced that? Long-term holders have sold 507,000. Wow. Bitcoin since that peak. But Glassnode notes that it is a smaller level than the 934,000 Bitcoin spent during the rally into the March 2024 all-time high. However, the long-term holder cohort is raking in record profit levels. Yeah, make that money, people. Make that money, get that money, and save that money. I'm not one of those people that like spend that money. No. I can't tell you what to do. This is not financial advice. Listen, I'm all about saving money. Not trying to be flashy. You're not trying to tell people how much you have so you're a target, whether you're online or offline. So you're not a target. You're not showing off the new big house you bought so people trying to come get you. No, save that money, live well long into the future, Anyway, that's just my thoughts. But yeah, make that money, people. I'm happy. It says here, quote, long-term holders have a key role in the price discovery process as they are a dominant source of previously dormant supply. Returning into liquid circulation, it becomes more prudent to assess the degree of profit taking amongst this cohort as the bull market progresses, as they tend to become increasingly more active as the price rises. So I guess one of the big questions is, where does everyone think the price is going to go for those who remain holders, right? Long-term holders. All right. So now, how much time we have in this video left? Let's go here to silver. Let's see if we squeeze in. This is a little bit of silver news here. All right. We haven't covered silver in a little bit of time, but it's one of my favorite commodities. Gold, silver, platinum, just like that. Gold, silver, platinum. You put copper down here. From once in a while, copper down here. No, copper and palladium would be tied for me, but I rarely dabble in them. But dabble, I will. If there's a catalyst, dabble, I will. So now, trust me on that, I will. Silver prices spike 332% during rate cut cycles. AI may be the next driver for silver demand. How's that? Let's find out. This is coming from Silver Stock Investors, Peter Krauth. It says here, sorry, I got a little bit of air in my chest. Silver is set to make massive gains, really, during the rate cutting cycle, and the AI build out may become the next big demand sector, according to Peter Krauth, author of The Great Silver Bull and publisher of Silver Stock Investor. Krauth sat down with Kitco Mining and Explore 2024 in Montreal to examine the state of the silver market and where investment opportunities will be in 2025. He said that the impact of the Federal Reserve's rate cutting cycle on silver prices cannot be overstated. And the historical data backs this up. Quote, what I did was I looked at once they start cutting rates and how does silver react after that, unquote, Krauth said. Quote, they will start to cut rates. Silver may come off for a bit, but it bottoms and then it starts to take off. All right, now don't talk too nice to me, sir. I like to hear that. I'm trying to make some money off that silver. No, to be real, I'm a long-term holder of silver. Got in real low too, matter of fact. But anyway, it says in the last 3 rate cutting cycles, if you go from bottom to peak in the silver price, silver was actually up 332% on average. It says, quote, that could have taken anywhere from about a year or to 2 years, unquote. He added, quote, but that's still a tremendous return, right? I'm not making it up. You can go and look at the numbers. That's how silver performed. I believe him. He doesn't seem like an individual who is saying these things just off the top of his head. I figured he had some facts, in his back pocket. Quote, Incrementum did some really good research. They took multiple historical recessions and split it up into 5 time periods. Pre-recession, early recession, mid, late, and then post-recession, unquote, he said. And quote, and silver outperformed gold pre-recession and post-recession, unquote. Now that is interesting. Krauth said that coming out of a recession, the U.S. Treasury will be looking for ways to stimulate economic growth as they have in the past. Quote, for the Treasury to spend, they have to do the things that are palatable for voters, unquote, he said. Quote, and one of the most palatable things is infrastructure, because people will argue that everyone benefits from spending on infrastructure. We shall see, sir. We shall see. Quote, silver is the key to all of these things. He's talking about EVs. Didn't I say that? I was just talking about that recently, but I clumped everything together. I clumped gold, silver, and platinum, mostly silver and platinum when it comes to electric vehicles, solar windmills. A lot of these other products involve a lot of silver. All right. And that could be key. And like I said before, I don't know who saw those videos. Watch the miners and what's going on with the miners and mining companies. Are they operating well? Are they getting robbed? That's serious business. Are they getting robbed? Are they who's shutting down? How much are they going to be producing or mining, however you want to put it? I look at those things from time to time, not all the time, but I look at those things and I try to find catalysts there, because sometimes there are big catalysts there. But you tell me, folks, how do you feel about silver? You bullish on silver or you bearish on silver? So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.